Hey guys, I hope you had a great Thanksgiving. It was good to see you. I hope you didn't eat too much. You're not too sluggish, right? New Year's resolutions are coming. Hey guys, welcome back to our weekly live event. This week I'm going to go over 3 of the main articles that I've read online and update you on the current projects.
So on Yahoo Finance this week, an article stated that the first commercial property purchased in New York is being put on the market for digital coin. Magnum Real Estate Group is selling 3 retail condos complete with a fully rented out retail bottom floor in Manhattan's Upper East Side for $29 million, but will only accept Bitcoin. What are your thoughts on that?
So it's becoming actually more common to see that. And there's actually companies now, title companies that specialize in receiving Bitcoin from one party and transferring title of a property in that process. Previously, when you would transfer Bitcoin from one person to another, you would go directly to them and you might not get what you paid for. So right now there are actually many title companies that are helping in that process. This is becoming more common. Eventually, the future you're going to see is that the title of policies will be on the blockchain. It'll be its own blockchain. The building itself will be its own blockchain. So instead of buying Bitcoin and trading Bitcoin for that property, you'd actually just taking cash, trading the cash for coins in that property. So it's almost like shares in a stock, and you would own portions that way. So you can have 1 million shares for this one building, and you could own property in Manhattan by trading your money for it. The interesting thing is going to come is when we're actually going to be doing loans for properties with cryptocurrency and microloans. So imagine this, the world's going to come to the point where you're buying 1/1,000,000th of a share of that building, and you're going to be able to get a loan for say 80% or 70% loan to value on that one share. So the distribution of risk in the future is going to be really good. It's crazy to think about it, but that is definitely coming. You know, they're working on that now. There's many people working on that right now. We are one of them.
So another popular topic this week, posted on MarketWatch.com, was how Morgan Stanley advised to resist buying U.S. stocks and Treasurys. What are your thoughts on that advisement?
So from the article, it was basically saying in 2022, we're going to be coming on to the tail end of the growth that we've been seeing coming out of the lockdowns. Many people expected there was going to be significant growth, people coming out of the house and spending money. Companies are seeing that on their stock price right now. We are coming towards the tail end of that and blending that into the supply chain issue. Mixing that with the current inflation, the 2022 outlook is not as strong compared to the amount of inflation we're seeing, that they were suggesting other asset classes like oil and gas over metals. I believe that metals are going to have a significant rise, but they're still being compressed. The price is being suppressed, where I do believe that oil and gas, with all of the factors of having so many pipelines shut down, all of the regulation, and with, if you guys recall, during the pandemic, they actually went negative on oil. So many of those small operators, and 80% of the operators of oil and gas wells are small, many of them went bankrupt. We have a large amount of data that is supporting higher oil and gas prices, and that will be better at keeping up with inflation and having a nominal return, a better nominal return compared to the S&P 500.
What can we invest in opposing U.S. stocks and Treasuries? If Morgan Stanley is advising not to, then apart from the oil and gas, what can someone else invest in then?
So with our fund, we focus on those things. We're tax smart investing. So one, we think about tax, inflation, and a return based off of a nominal return after considering inflation. So oil and gas is one, which is our carbon fund. Another one is real estate. When you're getting a loan under 5% or 5% or less, an inflation rate is over that, and they're saying that's between 5 and 6. But the reality is it's really 10 to 25 if you look at certain items. You're shorting the American dollar when you get a loan. And we're buying real estate, which has a significant amount of appreciation because to build new buildings takes a long time because of the bureaucracy, because of the supply chain issues, because of the labor shortages. So real estate in the high quality areas is going to have you give you a good nominal return, and the fact that you're getting a loan, shorting the dollar, is going to magnify that return. And then the next thing we're investing in, we're working on is in the crypto and metaverse. So we're working on many different investments in this space that have a significant resistance against inflation. And we're blending our investments between those three areas to give us a risk-adjusted return and having a more stable portfolio.
As a tax strategist, what is your response to Elon Musk's selling $8.8 billion so far of his Tesla shares?
The fact that he sold the shares doesn't really mean much. If we look at his personality, he sold PayPal and dumped all of his money into these other companies. So it is his personality that once a company starts growing and becoming established and having its own legs, that he starts selling his position out and investing into other developing industries. So he is an investor and an inventor that uses the modern financial environment to focus and grow and work on his inventions and his research. The next part of it is tax-wise. People are saying that there's going to be a significant tax paid from the stock sales, which is correct. But at the same time, he does invest so much into research and development in new companies that if he does use that money and put it into these new businesses that have no return and have a lot of R&D, he can get a significant amount of credits, especially if most of his investments are regarding green energy. So if he puts more money into green energy, there's significant tax breaks because of that. So most likely, most of that money should be washed and his tax return shouldn't be showing him owing much.
Some comments in the space of finance were that he sold because of the upcoming possible taxing on unrealized gains by Biden.
I mean, that could be the case. And if you're thinking about that logic and that one piece of information alone, if you're going to be taxed on unrealized gains, it's going to cause people to sell anyway. So that is going to be the same result. Who's going to sell then is going to sell now. So not that big of a deal. If you're saying, well, he wouldn't have sold if it wasn't for that, I don't agree with that 100% because he's shown to be the type of person to sell something that has been established into his next invention, next industry he wants to put his money in. Now there is a cause and effect. The government thinks that they're going to change the tax law and that will bring them more revenue. That can hold true for a year or two or so on. What ends up happening is they don't realize that people will change the way they do things. So if they find out that there's a big tax doing this thing, they're going to stop doing that thing. They're going to adjust the way to do it. Anyone that makes 400 grand a year or more is going to be taxed heavily. You're going to see very soon, most people are going to end up making less than 400 grand. And that's what I do for my own clients. For my tax clients, I readjust the way that they invest so their net is under 400. Even though maybe they made 2 million, we're investing 1.6 million into something else that gives us enough credits to put them under 400, and then they're not subject to all those tax. Hey guys, so a quick update on our projects. The Kor Carbon Fund is almost done. We're closing it out this Friday, so we won't be taking on any more investors, and we're basically full. Keep up with us. Send us a DM if you're interested in getting more information on our future funds that have great tax write-offs. Regarding the real estate fund, we have purchased another property. It's an ALF conversion, so we're really excited about that. I've already got a call. We bought it for $850. Plan to put in $400 into the place. We're being for $1.3 million all in. We've already got an offer for like $2 million, and it's not even finished. They said once it's done, we'll buy it. So that's awesome to guarantee a 50% return. And we have another property under contract, and we're working on putting another 4 under contract for that real estate fund. What's super exciting is when I heard that Kathy Woods is at opening up her St. Petersburg, Florida, right in the middle of all of the properties we purchased. That was our idea. My plan was to be in the market because I knew that the rents were going to grow up significantly. We're buying properties that rents are like from $400 to $800 a month, where the affordability of the market is around $3,500 a month. So if I provide the right product for the client, they can afford up to $3,500 a month. And that's where you want to be, is when the market drops, because we never know when it drops, but it will drop eventually. We want to make sure that we're in the place that the people can still afford to pay the rent, even though there is instability in the market. And we're working on the crypto mining fund. It is so close, so close. We're working with different engineers, chemical engineers, and you'll be like, why are we working with a chemical engineer for a crypto mining fund? You'll learn more later. But it's super exciting, super profitable, and I'm really looking forward to telling you guys more later about it. But for now, I'll keep you hanging until next time.